Good morning. This is Josh Hayes from Hedge Plus, and here's to the market monitor for Tuesday, July 15th. We're still in a mode where everything immediate is mostly bearish, and everything that is happening behind the scenes is building, is somewhat bullish and should show up down the line. That's putting aside anything to do with trade, even though we think eventually we will see the benefit of that. It's going to probably be more of a drip and an effect that is spread out. But prices are low and exports are strong. Export numbers continue to be revised upward for corn and wheat, and the weekly export inspections and sales continue to meet or exceed those projections, and we see no reason to think that won't continue. To give you an example, China just imported the highest number of soybeans in a month for the month of June ever, and they didn't get any from us, but they got it from Brazil. But what that really does illustrate that's helpful is U.S. soybean exports, while starting to sag a little bit, are still strong, meaning other countries are buying from us. And that's what we talked about long time ago, before any of the trade talks even started, or at least at the very beginning, that even if countries avoided the U.S. because of these trade talks, it would just lead to higher prices elsewhere as demand in other places shifts. If China's buying all of Brazil's beans, someone else who typically buys from Brazil is going to probably have to come to us. Brazil's prices remain elevated in spite of what they are bringing to market. Their massive crop, their prices are still higher because they have so much demand from all these countries trying to avoid the U.S. It just shifts other countries to us who typically would buy from Brazil. The prices are higher there. They come to us. I want to talk about what's happening that's bearish currently. That's obviously to do with weather. It's showing up in crop conditions. This condition report that came out last night or yesterday afternoon now has the soybean crop joining corn and the highest overall condition rating since 2016. We had a somewhat unexpected 4% climb in condition ratings for soybeans from 66% good to excellent to now 70% good to excellent. Spring wheat conditions jumped 4% as well to 54% good to excellent. And corn ratings held steady at 74% good to excellent. But regardless, corn and soybeans right now, both each at their best condition ratings in the last decade. The one issue we see with soybeans right now is we're starting to see a little bit of a drop in sales and exports. We had a marketing year low on export inspections yesterday, but like I said, that's a big part of that has to do is that this would have been a past month where China might typically have started to buy some of their beans from us. Instead, they bought a record number from Brazil, and that's continuing into July. But again, prices are currently higher in Brazil, so we would anticipate some of the other countries, perhaps neighboring countries in South America or even some countries in Europe that typically would buy from Brazil, might shift some of their buying to us. These are all things that will show up later. If these exports continue strong, and there's no reason to believe that they won't, it's going to be a situation where once we have our final numbers and we get past this period we're in right now, where majority of the growing countries in the world are bringing their grains to market here in the next 3-4 months. Once we get past that and the world works through this current glut of production, it'll show up probably at the latest once again in the early part of next year. Taking a look at the weather, favorable rains and no extreme heat. This is the forecast for the next 2 weeks, basically east of the Rockies, so pretty much everywhere where we're growing grains. And in Europe, the western areas are continuing to be dry. East can expect a little rain. That should be helpful for places like the UK and France. But there's definitely been an effect and a damage that will last beyond this period when they're expected to get rain. I know we've talked about some of that heat and dryness moving to the east that would take it into Russia and extreme Eastern Europe. Australia, their wheat areas are very dry and they are definitely in need of some rain. And in Brazil, note there would be that good weather is speeding up what had been a delayed harvest. On the whole, the headline for weather that I saw was that for the most part around the world, weather is very favorable right now. Very few areas of concern right now. If you had to say a spot was in the worst near term forecast, it would probably be Australia, but that is a very early onset problem there. Nothing that's going to move the markets too much just yet. Taking a look at the overnight, down across the board in the red, anywhere from about 2 to 3 cents. Putting into context where we've moved the last 4 trading days. This goes back to when I was with you last on Thursday. Believe it or not, corn is at the exact same price it was Thursday morning at this time. So that's prior to the USDA supply and demand report, prior to yesterday's day of trade. Corn kind of finding its footing, hopefully, here at around 415. Beans down about 5 cents from where they were Thursday morning, and wheat down about 14 cents. That's all for today. We will have our weekly Q&A, the Grain Gauntlet, for everyone tomorrow on Wednesday, and then I'll be back again with you on Thursday. Hope everyone has a great week.